let me bring on board our fundamental guest for today. Joining me is Anil Rego, who's the MD and CEO at Right Horizons PMS. Anil, great to have you on the show. How are you feeling about the kind of correction that we saw from record levels? In fact, China, of course, has been drawing out quite a lot of liquidity from other markets, right? And of course, Indian markets, of course, felt the jitters as well. But do you think, given the fact that there were, stimulus announcements have been underwhelming thus far, there have been no, fiscal stimulus announcement coming in from China. Chinese markets clearly reacting to that. So, do you think that the string of outperformance that we've seen in the Chinese markets, has come to an end, or do you think it will continue here on?
Yeah, so I think that, especially in China, it has been down for a very long period of time. In fact, if you go back and see right from, after the 2008 fall, it has been moving in fits and starts. So I would believe that it's more it's a bargain hunting that, probably will happen there. In the medium to long term, I am not as bullish, say, relative to India, especially, okay, on China. But I think it also ran up very sharply. So some of these smaller corrections here or there will happen. But broadly, I think China will also start inching up because now it's been a good period of time. Slowly, I think, I believe the regulator and central banks, all of that, and the government will also slowly have to come in and step in a much, much larger way over a period of time. They did bring in some bit of stimulus, so and I think they will follow up as required. So I would believe that China, as a reversion to the mean play, should not do too bad. Yeah.
Okay, but let's shift focus to the RBI policy then. The announcement will come in at 10 a.m. Do you expect some bit of a pivot? Because last time, RBI's tone was hawkish, but this time around, do you think that there will be too much focus on inflation management, given the fact that food inflation still remains sticky, but growth on the other hand has been slowing down, and there is pretty much a lot of evidence, right? Look at IIP, look at PMI data. There are signs of a slowdown or moderation, so to say. Do you think the governor will shift his tone to dovish? There is a case to do that, and even if rates are expected to remain same, do you expect a change in stance today?
Yeah, so I think RBI has kept saying that we will look at domestic factors. Of course, there is definite pressure because there have been a lot of rate cuts on a global basis that have happened. So definitely, RBI is will be under pressure from that. Saying that why are you the only means central bank not wanting to sort of decrease interest rates. Yes, and keeping in mind that there has been, I guess, some bit of moderation, initial signs of that are visible. Okay, of course, it also can be that in the base effect, right? So because we've done pretty well for a period of time, some bit of the base has also come up, and from there continuing to grow at that level may not be as easy. But I think yes, RBI, I'm hoping will at least change the stance to a little bit of dovish from hawkish. Yes, but the concerns around food inflation still remain, and that is sort of an important thing. There are elections also, so and that environment is still there. So I would think and hope that RBI will sort of change its stance to dovish. Regarding rate cut, I don't think anybody's talking about it. Okay, but if they do it, I think that will also be a surprise, and hopefully, I think in one of these MPC meetings, I think we should at least get a 0.25% sometime. Right? This time, I am not sure, but going forward, definitely, I think there will be pressure to cut rates.
Right, I will also, shift focus to earnings, right? Because tomorrow we have the IT earnings being kicked off by TCS, right? First quarter IT numbers were better than expected because we went in with very less expectations. This time around, of course, there has been an interest rate cut by Fed, a larger than expected one, so to say, but of course that will trickle in perhaps in the coming quarters. But would you have any great expectations from IT stocks when it comes to earnings, and any pocket that you feel would outperform? Because first quarter lacked, any kind of fireworks, so to say.
Yes, so I'm not expecting fireworks from the IT services definitely, and also I think from the rate cut in the US, from somebody who's in business, I tell them that that rates are cut is not necessarily a good sign, because it's admission from the central bank that things are not as good as what it was, right? So and typically the bad news is that that continues with a few more when it starts hurting companies, and the whole economy is hurting, and then the rate cuts continue there. So I would still be a little mindful of export or global oriented companies there, especially the IT services. The pockets of maybe well, opportunities that I see are the ones which are probably working on the AI side, and who have a reasonable presence that side, and who are sort of able to grow, because that is a separate secular trend which is likely to continue for some time. That companies are adopting more AI, and I think that could be companies in that space and having a slightly larger exposure are the ones hopefully will do better.
Okay, last question really, Anil. Any pockets that you are keeping on your radar? Because we've seen a 5% correction from highs, so to say, almost a 5% correction. Do you see scope for, deeper correction here on? Of course, we have the, tensions in West Asia that have come as a dampener as well, aside of the China factor. So, would you see a deeper correction? And if yes, which are the pockets that you would suggest one take safety in?
Yes, so at points like this, I would rather go towards safety, of course, and focus on companies with very good quality of earnings, good say ROE, ROC numbers, okay, and growth numbers, and sort of the engine is firing, right? So from that standpoint, at times like this, I would be slightly more bottoms up rather than sectoral oriented. That said and done, I think sometime I think financials will sort of come back. Okay, I also believe as time goes by, we also will see larger FI infusions. So large caps also hopefully will come back and start performing. Maybe hopefully on par with mid and small caps. Of course, we are not negative on mid and small caps as well. So, but on a selective basis where we see this good earnings growth underlying, okay, that is something. So, other than financials, which possibly is has been down for some time, and it's more a contrarian type of a thing that one expects there. We have continued to look at sectors like, say, building materials. Some of the consumer-oriented sectors also are something that we have been looking at.